What's good, YouTube? It's your boy MPL. So today, guys, I'm just gonna do a quick analyze for the week on Nasdaq. Yeah, it's just going to be brief and short, and I'm going to give you my bias for the week and yeah, some trade ideas and all that. So I will show you guys how I actually look at the market each and every week and looking for my setups and basically the bias for the week. Since I use ICT concept to trade, break a block is my strategy, and that's the only concept I use. I don't need to know about other concepts like Fairfax gaps, medication blocks, the 2022 mentorship ICT, usually liquidity, then break of structure and all that. New week opening gap, new day opening gap, and etc. There are different concepts, guys, but you just have to find one that really works. And breakup blocks really works with me. So yeah, let's just dive into it. So as you can see, we are on the 6 months chart. I like to actually check the 6 months because it just gives me more clarity of how the market is moving, like the big picture. Like overall, we're just bullish. So I like to mark my opening of the 6 months, which was here, January. Let me make this purple. Okay. I can also do the previous 6 months, but we don't need that. I just want the current one, but in case, nah, I actually don't want. And then I just mark out my highs and lows. But since we are bullish, that means we are gonna engage buy stops or sell limits, which is above the previous 6 months candle. This is the 6 months high of that week, right? So the high of that week, this is the 6 months. So we are going to engage buy stops. So we'll just make it purple here, right? All right. Now we go to the 3 month. When we dive into a lower time frame, guys, the lines doesn't change, so don't mind that. So even on the 3 month, we are bullish, so it also gives more clarity. Then we go to the monthly, which is this. Okay, I like to mark off the monthly opening price. I'll make this dark purple. Okay, dark purple, and I also mark my eyes because, like I said, we are gonna engage buy stops. So this is how we're gonna do it. Make it dark. All right. So you can see on the Monday 2nd of December, we did engage sell stops, which is a small Fairfax gap, price took out liquidity, accumulation. Wait, on the December we closed, price opened up, created that manipulation. If we are bullish, we buy below the opening price, and this is like a manipulation, guys. This is what I say: accumulation, manipulation, and distribution. Same thing that's gonna happen here on the current month of February. Opening price, manipulation, distribution. Now this is like the February month, and we are actually going to engage buy stops, which is like at 21,924 and one at 22,150. So yeah, we opened the monthly, so let's dive into our weekly. Most important one. Okay, the weekly is the most important one because it gives us an intermediate institutional bias, which is way important. So let's mark the weekly here. We did not even get a week, guys. So that means if we are going to engage buy stops, it's later actually going to engage sell stops because we did not even have a wick just opened fault and manipulation. Usually this type of moves they tend to come later. We must just check our calendar, Forex Factory, if we have incoming data like news. So please be aware of that. So let's just mark this off. As I'm also looking for buys because, like I said, on my uh, monthly chart and the 6 months chart, that I'm only looking for buys, and we did not actually engage that manipulation. But if we dive to our smaller time frames, maybe we'll get a setup that is going to engage buy stops or sell limits. So let's dive into our daily time frame. Okay, look at the picture. The daily time frame is the best time frame to actually trade on, or like to get clear the clear picture of the, or should I say, the trade of the day. Short-term institutional buyers, like we follow the trend of the daily, guys, because it gives us the big pictures. As you can see, we are overall bullish, right? The market is creating higher highs and higher lows. So let's just start here. Okay, higher low. Ba, 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 ba. There we are. It was a higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Oh my bad, hold up. Higher low, higher high, higher low. Now we are engaging to make a new higher high, which we actually took quite a long time because we've been just ranging. But guys, keep in mind we are still in the higher low. So we're going to create a new higher high. So I see guys trying to sell the market, but most of this type of moves you can scalp it, because for me I will not actually trade against the buyers. It won't give me a perfect risk to reward ratio, if you know what I mean. So if we really were bearish, we would need to break this low here and then a reversal and then something like that, you see. So guys, the trend is your friend, just follow the trend. It's really nothing complicated, to be honest. Alright, I like to go to the 3 hour, which is actually the best time frame for me to actually see for imbalances or inefficiencies or rebalances. Inefficiency, I'm talking about like sell side imbalance, buy side inefficiency, or buy side imbalance, sell side inefficiency. So that's why I say the 3 hour gives me more clarity too. You can see relative equal highs. We call this buy side liquidity or buy stops. And we have one here and the main one. So this is actually the monthly one, right? The 1 month, and this is the 6 months, which we are about to actually hit this week. So let's go to the 1 hour. I don't trade on Monday, guys, so I just want to see what happened. Okay, this is the monthly open, as I did mark it out. So as you can see, what's the rules of the opening price on the monthly? If we are bullish, we buy below the opening price. We have to see that form of manipulation. So let's just see. Okay, I'll just make this a different color. The Sunday opening, yeah, something like that. So guys, we did create a manipulation, which was, look at the opening manipulation here. And guess what? When price broke out, what do you see here? A fair value gap, right? with the previous 6 months opening. Sorry, not the previous, my bad, of the 6 months opening of this year. As you can see how price just retested this, retested it, but with the fair value gap, it's just accumulating orders. That is also more confirmation. And then we broke out again, retested again, fair value gap, guys. Then the market shot up. So breaker blocks, how do you know where's the breaker? Well, we broke the structure, guys. So that's actually my breaker there. Alright, let me use this. Mark it like this. Good. So if you did entered here, your stops will just be below here. This low, or you can mark it by this candles. This candle's low or this candle's weak. Whatever you choose, depending on your risk parameters of your account. Alright. Then we actually broke out again with the sell side imbalance, buy side inefficiency. Alright, guys. So what do we have here? We have an imbalance, guys. You just draw that out, then you just stretch it out. Make it green here. Okay, guys, the reason why we actually this was like the opening price, but look what we have here, order block. This is the opening candle, right? And we just open, and this is like the imbalance of FLE gap with an order block. That's why when we open the price, it just shot up. Now, as you see, we are going to engage this first buy stops in the main monthly one, guys. So as we can see here, let's go to our 30-minute. All right, let's just mark this. Okay, I'll mark this for Tuesday. All right, guys. So guys, as you can see, we closed above this fair value gap. It becomes inverted because we closed above, like it becomes support. So we just have to wait for a reversal, which actually happened here. Like the consequence enroachment of this midpoint. Most of the times I draw out the box, but you can go use your Fibonacci retracement and just measure this. And then the midpoint, you see, 50%. So this already gives me clarity that the market is still gonna continue with buy stops. My stops are just here, this lows. Then I'll target the highs. TP1 and TP2 and TP3. Or whatever you decide, guys. So I say this is actually not the best entry for me because we are way above premium right now. So let me check what happened throughout the day. Let's look for the midnight opening. Alright, something like this. Okay. Midnight opening. Okay, 8:50. Let's see what the 8:50 did. 8:50 opening. 9:50 opening. 9:50. Yes, the 9:50. So price actually left all this relative equal lows here, guys. So I'm expecting tomorrow for price to actually take this lows out. I don't feel comfortable leaving this lows here. There is so much money below here. Sell stops. people place their stop losses here, so there's money below this sell-side liquidity, but all right, now I see why price did not actually engage to this sell-side liquidity, because we broke out here. Let me show you what happened. This is the 850. 850, usually there's news happening. If there's news, then you have to wait. If we are bullish, then price will actually engage to take out liquidity or rebalance or look for inefficiency, which it actually did. This, like I said, this is just to rebalance again and sell side liquidity. Usually this happens most of the time. The market would not mostly go and take out the lows of the day. It will probably try to engage to a previous or to a previous low, or we just need to rebalance and continue going up. And then let's check. We're diving into a 1 minute. Okay, so this was the 850 opening, right? So 850 came by, and 950. This is the open, because this was the open. Price came, closed down, price open again, a small fair value gap, and we went to go take out again. What happened? 925. We went to take out the lows again, price engaging, sell stops again, sell stops again. But when we broke out here, listen guys, we swept liquidity and broke. What do we have here? A fair value gap. This could be your entry. This inefficiency here, fair value gap. There we go. And just mark it, draw it. Price tested, which went up, came back again, and went to engage these buy stops, but came again. What do we have here? Sell-side liquidity, rebalance. You can see went to go refill this gap again, and then we went to attack buy stops again. Most of the times people will place their stop losses on entry. These guys got taken out again, and price shoot up again. Buy stops engaged. Targeting the bigger time frame, like I said, when you enter on the 5 minute, 1 minute to 3 minute, you trade with your time frame, the biggest time frame, guys. Either the daily or the 4. I like to trade with the pre-hour. So yeah, if you'd have entered this trade, you look at the bigger time frame and then you just wait, because trading is all about waiting. It's a waiting game. Once you set your stop loss and your targets, you set and relax. Don't do anything. There's a reason why you place your stop loss, to prevent you from losing money. So every time you enter a trade, you must know how much you're losing or willing to lose, because you can't just enter a trade you don't know how much you're risking. It's like you're gambling with your capital. So if you know how much you are risking and you've accepted the risk, then let the trade do its thing. The stop loss is going to do what it's supposed to do. It stopped you out because you were wrong. It was inevitable. So it's inevitable to hit your targets, and it's inevitable to hit your stop loss. That's what it is, guys. But now I'm actually confident about this. This could actually be, I don't know, throughout. And maybe if we take out the buy stops, then we will come here. We will come actually engage this sell side. But the fact is, we actually filled up and we closed up. So if we do not take out this high, then like if we do not take out this high, guys, then I will not enter this trade. If we take out this low, right? If price just does this, then we are going to attack sell side. Like I said, it doesn't make sense for me to buy on a premium. You measure the low of the day, which is the middle and the high. 50% discount. So in order for you to actually enter this trade, right? We need to actually come here because this will be like a breaker for me and then continue. That's how I see the market moving towards the upside. So we're actually heading into a macro or the silver bullet session, which is 2 o'clock to 3 o'clock Eastern time. As you can see, we did test the third belly gap here. But what did we leave here, guys? Sell stops. We left sell stops here. So keep in mind, too risky to enter into this area. Very risky. And we also have buy stops here. But what do we have here? An inefficiency, right? Keep in mind, guys, this way too risky to enter this trade. Way too risky. Way too risky. We already did this move in the, but look what we left here, guys. Money. So until we take these babies out, I'm not interested in entering this trade. Even if it comes like this, I need this loss to be taken out. Trading is a waiting game, guys. And look at this, we have a volume imbalance, so I can anticipate price coming all the way here and then probably do something like that. Well, guys, that's actually it for Nasdaq. I just wanted to show you my favorite pair. Yeah, so guys, the bias is actually buys and bullish. Please do not look for sells. Like nothing tells me like uh, Nasdaq is actually bearish, even though on the 3 hour it looks like we've been ranging. Looks like ranging. But overall, when we go to our daily time frame, we are bullish. Weekly bullish, monthly bullish, 3 month bullish. Just stick to the bias, guys. Okay, guys, that'll be it. If you want to be updated with this trade idea, just click the link below. I do have a Telegram channel community where I send out these trade ideas almost every week. So just click the link down below and just join, guys. It's free. And yeah, that'll be it. I'll catch you guys in the Telegram group. Anyways, see you guys. Peace out.